what our market construct is looking like. Lots to react to. We're going to be kickstarting a new series. You'll have lots of numbers and of course, all the global news flow as well. We've got Aditya Arora joining in on the show right now. Kunal will be with us shortly. Aditya, hi, good morning. Good to have you on the show. Tell us what's in store for us, given that this week so far, you've had the Nasdaq scale up by about almost 5.5%, and the Nifty is not too far behind, and over 4% uptick so far.
Very good morning to you and to everyone. It has been a fantastic week where market recovered very sharply, although Bank Nifty was the star performer. And later in the week, Nifty took the baton for the markets to do heavy lifting. I think today Reliance will report results, and Reliance is coming out of big time consolidation. So next leg of rally could be from Reliance Industry. If we take a view of half a month, 1 month, or maybe the next expiry, I think Reliance could actually help the market go a little higher. So heavy lifting from Reliance is expected, and as the environment improves in USA, Nasdaq being the most sensitive space in all the three indices, Dow Jones, S&P, and Nasdaq. Nasdaq could lead the rally, and same kind of sentiment shift could be seen in Indian market. We have seen Indian markets, Nifty IT specifically, reacting and catching up with the global trend. I think that trend will sustain, and we can see rally from IT also. Although uncertainty on domestic front like geopolitical tension, etc., on the border front could give knee-jerk reaction, but that should be taken as buying opportunity, because overall structure of the market is pretty positive. If we talk about Bank Nifty, then the lows of April expiry will hold, and retracement towards levels like 24,000 to 23,500 should be taken as buying opportunity, and we could scale towards higher levels like 24,500 to 750 on Nifty.
All right, so those are the cues that Aditya is tracking at this point in time. But let me also welcome Kunal Bothra on the show. Hi, Kunal. Good morning. It's the start of the first series, and like Aisha was mentioning, that there's a famous line that sell in May and go away. So what do you make out of this, and do you believe that for this particular series, it could actually hold true?
Let's hope not. It doesn't hold true, but I think we've seen a fantastic last two series. And prior to that, 5 months of a drubbing for the index, where we saw sharp selling from 26,200 on the Nifty to at one point we were sub the 22,000 mark. So it's been a good 4,000 plus point correction. And then in the last 2 months, we've seen the index recovering almost 2,000 points. So which means we are almost 50% retracement to that 4,000 plus point correction for the Nifty. My sense is that the markets are getting a lot more broad-based. We are looking at many sectors reviving on a rotation basis. So, earlier it started off with the banking stocks, which did exceptionally well. Then came the time for NBFC. Now you're looking at the IT stocks recovering, auto stocks going into a recovery mode, cement stocks, etc. So there are many sectors which are playing their part in terms of a classic rotation. Even the expiry numbers were a lot more indicative that traders are looking at a positive build-up, and especially with the global cues being a lot more calmer than what they were earlier. With India VIX at 15, 16, I think the markets are not anticipating any kind of a major negative. So unless the news flow turns out to be negative, I believe the markets should remain more calm and stable.
Right.
If you like this video, then like, share and subscribe to ET Now.